camera, action. Welcome to Idea to IPO. Hello, my name is Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many, many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 100,000 members among all our meetup groups all around the world. We've organized, promoted, and produced over 2,479 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, bar none. We organize venture capital panels, legal workshops, and more. These days, we're 100% online. We have an event nearly every day of the week. Check out our schedule at ideaipo.com. At this point, I'm going to hand it off to our distinguished moderator, Jason Putnam-Gordon. Jason, take it away.
Thank you very much, Rob. It's a pleasure to be here to work with you. We've gotten to work with you on in-person events since 2013 and virtual events now that we're in the age of COVID. So I'm very excited about today's panel. Today, we're going to be focused on the latest investment and innovation in energy and climate tech. We've got three fantastic panelists. I'll introduce them in a moment. But before we do, I want to let everyone know who's in the audience what's going to happen today. It's sort of the path of today's discussion. So first thing I'd like you to do is fill out your audience survey. It gives us a feel for who's in the room. While you're doing that, we're going to go through. We'll introduce you to Carolyn Funk at Blue Bear Capital, Maria Boitron at Piva Capital, Max Webster at Version 1 Ventures. We're going to have them speak for about an hour or so, about a panel discussion. And then we will move on to a Q&A. Now, to use the Q&A, please, or to submit a question, please use the Q&A function. I'll remind you a couple of times probably throughout today's discussion, but it's easiest for us to track your questions if you use the Q&A function. It's a little bit harder if we use a chat, especially if a bunch of people do, because everything gets buried. So please use that. As Rob may have mentioned earlier, today's discussion is going to be recorded. So if you miss some or all of it, so long as you've registered, we'll send it to you afterwards. Now, with that in mind, as Rob mentioned, I'm Jason Putnam-Gordon. I am a venture capital and emerging growth company attorney with Pulcinelli, 900 attorneys in the United States, 20 plus offices, work with AI clients, Internet of Things, and a lot of that intersects with energy and climate. So I'm super excited to introduce Carolyn, Maria, and Max. With that, Carolyn, maybe you'll start by saying who you are, your fund, and also what you're focused on. And then we'll go around to Maria and Max. Thank you.
Sounds great. Thanks for the introduction, Jason and Rob. Great to be here again with all of you. And yeah, thanks to the audience for tuning in. I'm Carolyn Funk with Blue Bear Capital. We invest in the digital side of the energy transition. So really software and data-driven business models for the whole energy supply chain. We usually invest in seed Series A stage companies, sometimes Series B, and then reserve a multiple to follow on. About myself, briefly, I started off back in Germany. That's where the accent is from. I'm from Berlin. Working on energy, getting into the energy topic through the automotive side. I did a PhD researching advanced biofuels. And while I was on track on getting the good German kind of automotive mechanical engineer, building better, faster cars, that got me interested in the energy space and really answering the questions, how are we going to power all that and how are we going to do that in a sustainable way. So I decided to make this the core of my career. I moved on to the policy world, worked with the German government and German utilities to define the energy transition that's now unfolding over there, and wanted to be more hands-on and see things move a little faster. So I moved to the Bay Area about 8.5 years ago, and of all places, worked for Siemens, but in a group that is now part of Next 47, that Siemens' $1 billion startup investment and partnership group, and really they're focusing on kind of how can a corporate like Siemens look at that digital energy transition and new products in that space. So that was my stint on the corporate side. I then worked as a head of operations COO in 2 different energy storage plus software startups. So kind of gained my knowledge on as an operator in startups, which was really fun times. Happy to talk more about that later on, and also answer the audience's questions on that. And yeah, from that transitioned into venture. And what I really find exciting here is that I get to do the work that I did at one startup with multiple entrepreneurs, because we're hands-on and we help wherever we can, if it's with hiring or through kind of helping with business development, helping with kind of understanding policies, understanding markets, and sometimes just polishing up a deck or a proposal to the California Energy Commission. So whatever it takes. So really, yeah, glad to be here.
We're delighted to have you here today, and it's great to be on a panel with you again. Maria?
Sure. Thank you, Jason and Rob, for the invitation. I'm super happy to be here. I'm Maria Buitron. I am an investor at Piva Capital. Piva, we are a relatively new fund based in San Francisco, $250 million, investing in the future of industry and energy. We see these 2 big trends of decarbonization and digitalization as the 2 main drivers that are gonna be really changing the legacy industries that we rely on. And so we're investing in startups that want to bring innovation to those industries. We typically come in at a Series B stage, can be a bit earlier, a bit later. We write $5 to $10 million checks. And when I mean the future of industry, I mean energy, transportation, ag tech, food, heavy industry, materials and chemicals. So really the big industries that power everything we do. My personal background, I am originally from Mexico City, chemical engineering undergrad. I grew up in one of the most sunny places in the world. And so really had an appreciation for solar since I was little. I had a minor in environmental systems and just really wanted to work in energy. After I graduated, I started my career in consulting, then really had this desire to be working with early stage startups and be part of innovation and change from the beginning. So I moved to California to go to business school. I worked with startups of different shapes and sizes, from the 2 founders that were still thinking about their business model to a 100-person startup as part of a larger team. That is when I met the venture community and realized the value that investors can bring to early stage startups and actually helping them grow. And I met the Piva team and I joined right when we were launching the fund about a year ago.
Well, that's fantastic. I'm delighted to have you on the panel today. We haven't been on a panel together, so I'm looking forward to that. And same with you, Max. I haven't been on a panel with you yet. But tell us a little bit about yourself and your fund and what you invest in and what you're looking for.
Great, thanks so much. Also very happy to be here. So I'm with Version 1 Ventures. We're an early stage fund. We focus mostly on seed and pre-seed deals. We like to back mission-driven entrepreneurs at the earliest stages. Historically, we've been around for 8 or 9 years, and we've invested across the spectrum, mostly in software startups. And I think increasingly we are becoming really excited about the confluence of events happening in the energy world, the climate tech world. We've started making about 1/3 of our investments this year have been on the energy and climate side, and we see that probably is going to accelerate in the next couple of years. Personally, I've been involved in the solar and renewable energy industries for a long time, about a decade. I started a couple of startups in the crowdfunding for energy efficiency in solar spaces, and then was part of the founding team of a company called Bright, which is now the leading residential solar company in Mexico, uses a very similar model to something like the Sunrun here in the United States. So I've been watching, the cost of solar and renewables fall down the cost curve the last decade, and I'm extremely excited to see the explosion that I think the next couple of years are going to bring. As a fund, a couple of the areas we're most interested in on the energy side, our thesis is that the grid is going to become increasingly decentralized. Solar, storage, wind are going to play an increasingly important role. Smart devices are obviously going to play an increasingly important role as well. So we're looking for, software solutions to help connect all of those. And then on the climate side, and not just climate, but, in terms of natural capital markets, we think there's a tremendous opportunity to bring more data to help essentially create markets for things like, land usage, biodiversity loss, natural carbon markets. Those are the areas where we're mostly focused.
Terrific. Well, we've got a great panel with a wealth of experience also working in, all in energy and climate, but also kind of, from seed through B, which is a great panel, especially because as I look at our survey, which I'm going to close now, it looks like 50% of the room are first-time entrepreneurs, 22% are serial entrepreneurs. We've got a couple of angel investors and corporate investors, a few students. About 16% are here in the Bay Area. I would say probably a total of 40% are in the US, 30% in Europe, 8% in Asia, and then we've got some folks probably from the Middle East who are in the other category. So that's who's in the room today. But of course, this is also going to be released and to everybody who registered. So with that in mind, why don't we pivot a little bit and start to talk just about energy and climate tech and what we've seen in the last year or two and what we see sort of on the horizon moving forward. Is there a first taker for that question?
Sure, happy to go. I think that having been in the space for quite a while, and we all here on the panel have seen this, is I think over the last 2 years, talking about energy and climate has become more mainstream. Whereas before that, we were in our little niches, and Max, Maria, and I would probably kind of not just meet in a bar and start. We don't do that during COVID anyways, but just start about climate change just like that. I think this is a topic now that is open for discussion that within families and dinner tables, and it's not kind of it's become common. And the other trend that we're seeing on the investment side is that more and more folks who are more generalists get interested in the topic and actually call folks like us here on the panel. I assume definitely they call us at Blue Bear and to get expertise when they make an investment in a company that maybe has a more horizontal platform software application, and energy is kind of one vertical, and trying to really understand how that kind of growth and effect that's happening in the market is panning out there. And I think another trend we just saw this year that it's kind of common understanding, and I hope I'm not too controversial here, that we've reached peak oil, and we don't know how it's going from here, if it's going down or staying flat. But if you see how many oil and gas focused businesses, if it's consulting, advertisement, marketing, are kind of rebranding, and where you saw kind of a drilling rig on their website before, now you see a solar farm. I think there's that clear transition, just also to spur some more comments from my co-panelists here.
Yeah, I think I'd agree with Carolyn. I think one of the other things that have changed, and maybe this is actually in the past more than a year, maybe in the past 5-10 years, I think the conversation used to be a lot about renewable generation capacity and solar and wind, and how much solar and wind can we install, and the prices, and a lot of work has been done in that space and actually building the infrastructure. I think the conversation right now in what we call climate tech is beyond that generation capacity, but everything that we can do across many different industries. What Carolyn was talking about, having platform technologies where energy is a vertical, but also looking for solutions in other industries. I think we're also seeing trends of, in general, the cost of sensors and cameras, how we have so much better computing capacity and connectivity in where we are right now. That drives new business models, that drives new technology, that drives efficiencies in different industries. So I think we're seeing more and more of that in the verticals that we're looking at.
Yeah, I mean, agree with all of that. I think from my vantage point, there's kind of three big interesting trends that are converging here. On the energy side, I think the main story in my mind is just the cost. You know, when I was first getting into solar about a decade ago, it was dramatically more expensive to build solar than it was, you know, coal or natural gas. To give you just a sense of some of the numbers, you know, the levelized cost of energy, the cost per kilowatt hour from coal or natural gas is somewhere in the 6 to 7 cents per kilowatt hour. Now, you know, a decade ago, solar was dramatically higher. In just about a decade, solar has fallen about 90% to the point where today, depending on where you are in the world and how much sun you get, you might be able to build solar for anywhere between 1 to 5 cents per kilowatt hour, right? And so what that means is that it is now cheaper to build solar, and in some cases wind as well, but it is cheaper to build new solar than it is to operate existing coal and natural gas plants. This is a monumental shift. And I think, you know, very few people have really seen just exactly how big this is going to play out. But I'm starting to see companies and funds that are buying coal and natural gas plants today, or at least a coal plant, tearing them down, using their interconnection, and then rebuilding a solar farm there. So I think that's an extremely exciting change. And frankly, the cost, you know, as Maria said, we built out all of this infrastructure over the last decade. It just didn't exist 10 years ago. Now that we brought it down the cost curve, we can kind of see the second order implications of that. So I think that's really exciting. The second thing is, I think, you know, obviously the big problem with solar and wind is that they're variable, which means, you know, sun shines during the day, not at night, wind blows sometimes it doesn't. And so the other cool thing that we're seeing is with the digitization of the grid, from everything from EVs and smart devices and thermostats, et cetera, at home, we now have the ability to be a lot more flexible with our demand. And I think that's going to be really important because, you know, one of the big problems with solar is if you have too much during the day, what do you do with it then? And so I think that's kind of the second big trend. The third thing that I'm seeing, to Carolyn's point though, is, you know, in addition to these big dramatic cost curves, I do think there is a social shift happening as well. I mean, just look anywhere around the world. I personally got extremely interested in climate change back in 2005 because my family lived down outside of New Orleans. And when Katrina hit, I started reading about, okay, if we're going to start seeing stronger storms, like this could happen everywhere else in the world. I think most communities need to see events like that to really make it set in for them that climate change is not theoretical and it's not just going to impact somewhere else. And so the wildfires here in California, you know, rising sea levels in places like Miami, like I think it's starting to set in with a lot of communities that this is real.
And so, I mean, some of that I think is probably driving a bunch of consumer behavior, which is now enabling or pushing the increasing demand up. And are there particular, you know, maybe that's occurred in solar, you know, whether it's putting solar panels on and putting batteries in your home in order to sort of decentralize the grid. I think you were talking about that a little bit, Max, earlier in our conversation or our pre-call. Where are some other areas where you're starting to see that demand and some open niches potentially to exploit or that are being exploited?
Yeah, I think, I think one is electric vehicles and how we're seeing the shift in traditional car manufacturers now making bigger claims into just going all electric, if it's GM or Ford or Hyundai. Volvo was earlier on, of course, Tesla has been leading the pack there. But I think kind of the distribution of new vehicles and affordability that hopefully that will be driven through that will create a big opportunity for an everyday user to be part of that. And I think just the numbers that we're also seeing from some countries phasing out new registrations of internal combustion engine vehicles is one. We still have, just staying in that kind of sector for a moment, we still have a lot of questions to be answered here. And it's far away from kind of being a great and solution that could be as clean and cheap as we're all hoping for. So also there, we see a lot of opportunities for entrepreneurs in kind of tracking the supply chains of everything that's going, all the materials going into EVs, and recycling of batteries. it's going to be an important topic. Monetization of EV charging. We can build EV chargers, and it's not like an exciting new kind of electrical technology that we need, but new business models. If it's battery back charging, if it's charging, if it's kind of locations that provide, I don't know, discounts, advertisement, whatever it is. We don't have good solutions there yet. So to all entrepreneurs out there, I think like we have the basic concepts and we have the technologies available, but we're still stuck in kind of not really knowing what business models are going to fly on those ends.
I mean, I think that's a fair point, and I think it's a little bit of an unfair question for me to have asked. Sort of, what is it that you think where there are opportunities to be exploited? Because it is, by and large, the job of the entrepreneurs in the room to identify and put those business plans together. But it's always interested to see what's trending now. And
we're looking for those. So if
that's right.
Yeah, I just mentioned those like very few areas.
Yeah, and perhaps just as a follow-up to that, I mean, I'll throw out a couple of things that we're looking for, or very interested in. 100% agree. I mean, storage and batteries are the holy grail. Unfortunately, not the actual hardware technology piece is not really in the purview of our fund. But I think that what really gets me excited is that we're seeing the exact same story with lithium-ion batteries today that we saw with solar PV over the last decade, which is that people continuously underestimate. If you have a 15 to 20% cost reduction year after year, and that compounds, which is what we saw in solar and what we're seeing with lithium-ion batteries today, the second order implications of that are massive. I think it means that we're going to be able to store a lot more energy on the grid, at the edge of the grid, much more cheaply and much, much, much faster than most people realize. And so the big question that we then have as investors is, okay, what next? Like once you have the ability to build a lot of solar and wind very cheaply, to put a lot of storage out there very cheaply as well, what can you do with that? And so some of the questions we're thinking around are, if you have 200, 300, 400% more energy than we have on the grid today, what can we use that for? Can we use that to, desalinate water, create green hydrogen? Those are the kinds of like big questions I think are most exciting. And the second thing, and I think this is also very important for us, is, batteries, like hardware batteries, are one option, but we're also very interested in virtual batteries. I think the promise of aggregating a ton of both industrial and residential customers, particularly residential customers, has been around for decades. I mean, companies like Internoc have been doing this on the industrial side for a long time, but on the residential side, no one's really cracked this. Like, how do you get consumers to aggregate tens of millions of households together so that their load can be flexible, or their demand or can be flexible as well for the grid? I don't think anyone's cracked that, and we're looking for someone that can bring some new perspective there. We'll also talk more about this later, but I think there's some really creative uses with things like cryptocurrency mining that can come into play there as well.
And I can also talk about a couple other spaces that I think where we're seeing big opportunities and where we would love to see more companies. I think driving efficiencies in, for example, in manufacturing. So doing what you already do, but doing it better and in a more efficient way. I think there are lots of opportunities there. People that really need to speak the language of the consumer and go after the vertical that they're targeting. So I think there is a lot to be done there besides the energy world. I think there is also a lot to be done in agriculture and food, and we could go into all the opportunities and the numbers there. But I think something like a quarter of global greenhouse gas emissions come from the food that we produce. We will need to clearly produce more of that as the middle class continues to grow around the world and people demand a more protein-heavy diet. So definitely lots of opportunities there in that space. How do we become more efficient, and how can we satisfy the needs of consumers? So beyond what my fellow panelists have mentioned here, I think there are lots of other opportunities in those spaces.
So sticking with that theme in terms of, or sticking with batteries for a moment, because I think that is a really exciting area. And I mean, one of the things that really excites me about energy in particular when it comes to clean tech is like, I've got an econ background, so I think about how do we increase human productivity, right? And energy is really like that charge, that boost that allows an individual to do so much more, and of course society to do even more on top of that. And then if you've got the ability to produce that energy and to store that energy in an environment where it doesn't produce externalities, right? It doesn't have the pollution and it negatively affect the rest of our environment, you can completely change the landscape. What are some of the challenges when it comes to the growth, utility, and the mass adoption of batteries, for example, lithium-ion batteries in the consumer space?
I don't need to go first all the time.
Maybe I can start. I think thinking about like residential, so actually having consumers install batteries at home, I think cost is still an issue. I think there are a lot of energy market components that we need to figure out. So for example, larger batteries can play in larger energy markets, but you need to aggregate those if you're looking at a residential level for them to actually be meaningful and be able to so that you're actually able to monetize them. So just thinking about the scale and the cost, that is one of the issues. Thinking about storage in general, leaving behind just residential, there is still a technical challenge to be able to have long duration storage. Of course, we need to figure out how to deal with solar and wind and the intermittency during the day, and the fact that you can have a battery that works during the night, or have a battery that works when you have a blackout. But actually having energy storage that lasts for days or months, that is still a technical challenge that lots of companies and the smartest people in the world are trying to solve. So yeah, I'd say that's two of the complications right now.
Yeah, I would say on the residential side, and really like with all of our lithium-ion batteries today, I think it's mostly just a function of cost. I'm pretty confident that it's going to keep falling down, in that 20% per year range. So I think it's just, it's kind of like when solar, like the reason that we went to Mexico when we did in 2015 is you can literally just like look around the world and say, what's the cost of grid electricity? When is there the solar tipping point where solar becomes cheaper than grid electricity, and go there one by one markets? So if you look at where batteries are successful today and where companies can, install solar and batteries together, it's wherever there's really expensive grid electricity where they can do arbitrage. So for example, here in California, if you're doing time of use pricing on your energy, there's periods of time when there's, a ton of consumers on the grid that are using electricity where it's 30 cents a kilowatt hour. And then there's periods of time where it's negative, it's literally free. And so, batteries already make sense in some cases in states like that, where you can arbitrage between those two different, costs of the energy. But I think literally like year by year, as the cost keeps coming down, you're just going to see more and more markets open up, and entrepreneurs, hopefully folks on this call, are going to, be able to go and attack those one by one. Also, definitely agree though with Maria. In the long term, like there's some really cool stuff happening with flow state batteries and all kinds of, longer term storage. That's like a lot. It's much more difficult to get a read on when that becomes commercially viable, but it's exciting. And I think one kind of like maybe sort of dark horse here is that perhaps a lot of consumers' first batteries won't be a battery per se, but might be an electric vehicle. And so once they get an EV at their house, it's kind of a Trojan horse where, they've already got a charger, they've interconnected it, and perhaps, whoever connects it there can start doing some of those arbitrage plays without them really knowing what's going on.
Kind of like their iPod back in early 2000s. For those of us who are old enough to remember that.
Yeah, and just I think also to Max's point, that helps you think about energy in a different way, because you're starting to think about kilowatt hours and kilowatts and what does this mean, and which is really abstract to a lot of folks, but you're also trained to keep that abstract, because if you go to the gas station, you think about dollars and gallons, but what actually is in that fuel that you're getting into your car, you don't really care about. So you get trained in a different way, and just and I think that is exciting, because you think about your light bulb, and you think about like actually not just because somebody said you should use an LED, you think about, oh, wow, that's a 40-watt light bulb and I can replace it with a 2-watt LED. That's pretty exciting. So it starts making a lot more sense. And I think that ties back to the whole, I think a big issue that we're currently having, and we had it with solar early on, is train the installers. Like have people who are making those recommendations, who are your trusted partners when you're like, as a residential level, you're thinking about, or your water heater blows up and it's a gas boiler and you need something new, and you call your installer and they're just offering the same to you again. Well, systems have evolved and you should get an electric heat pump based water heater instead. And on the industrial scale as well. So I think we need to actively educate the people on the ground who are kind of making those recommendations. And just like in the solar world where we kind of needed to get to those installers, but now we need to do that with storage and batteries and builders. And some communities are at the forefront and kind of driving new home installation, having solar and storage and no gas. San Francisco and Berkeley at the forefront there. So that's exciting, yeah. But I think we still have a long way to go and we're running out of time.
Yeah, I'd actually like to second that, Carolyn. I think that's a fantastic point. Like, this actually gets me extremely pumped up, is that if we're going to get to 100% of our energy coming from solar, wind, and batteries, and storage, which I think is possible pretty soon, man, we're going to need, millions of people around the world just installing all of the solar panels and the batteries and like the EV chargers and operating them. And as we're, in a pretty, a seismic shift economically, and I believe we're kind of going from the industrial age to the information age, there's going to be a pretty rough period where a lot of people are without jobs. This could be an incredible opportunity to give, employment to really meaningful and good paying employment to a lot of people. And so that's actually one of the areas I'm most excited for. I've been looking for an awesome platform to train the next generation of solar installers, EV installers, et cetera. So if you're working on that, please reach out. I think it's a great point.
No, I think there's a lot of opportunity out there, and it's kind of come probably at the right time as well, sort of given what's going on with the pandemic and the political climate and all that, and all the change that's afoot. We can go there, or the other sort of question that I wanted to touch on was, we were talking a little bit earlier about the digitization of the grid providing more flexibility. And also, and some of the things that are adding and contributing to it, and some of the opportunities there. Where would you like to stay, panel? I leave it in your hands. Maria, maybe I'll call on you because you've been quiet for a moment or two.
I can go either way. Maybe talking about the digitization of the grid, I don't know if you had a specific question, or I can just talk about the trends that we're seeing there.
No, please. No one has come to see me, so they're all here to see the three of you.
Okay. Well, I think on that side, there are very interestingly both hardware and software innovations that are needed. On the software side, we can just talk about the complexity of how managing the grid will continue to evolve. We will now have all of these smart devices and thermostats and EVs and batteries and solar, all of this connected to the grid. You want to orchestrate the production and consumption of all of those devices. That is challenging, and I think we're seeing lots of different innovations there with different business models. We will of course need more devices, so definitely on the hardware side of things, we will continue to see just how everything continues to be smart, everything continues to be electrified. So also just adding up to that complexity and that problem. And yeah, maybe I think both Max and Carolyn are a lot deeper into this than me.
Max, is there any place for crypto to fit in there, or blockchain?
Great question.
Softball.
Yeah, no. So first of all, yeah, I mean, look, I definitely agree. Just digitization of the grid, very exciting. IoT, like the amount, I think I've seen something like 15 to 20% of ACs are now smart. That's going to get it to up to 100% pretty quickly. I think there's a ton of opportunities there. You know, I think the big challenge again is like, where do you start? Where do you aggregate? You know, consumers don't really, you know, it's interesting to them, but it's not hugely high on their priority list. So I think there's like a lot of questions around how do you kind of Trojan horse in there, but it's something we're very excited about. And again, like our thesis is the grid will become decentralized. There's going to be a lot of data, and if you're a clever software entrepreneur looking how to put all that together, we'd love to hear from you. On the cryptocurrency mining side, so as Jason knows, my other kind of obsession outside of solar and batteries is Bitcoin. And you know, this may seem somewhat paradoxical at first, as you know, there's a lot of sort of claims levied against Bitcoin that it's terrible for the climate, wasting energy, et cetera, et cetera. But I actually view it as a very good thing. I view sort of, you know, the way that I think about Bitcoin is that I think it's kilowatt hour currency. It's literally energy backed. It's literally currency backed by energy. And you can go back to the history of great thinkers like Buckminster Fuller, you know, Tesla, or I don't know, I forget if it was Edison or Tesla, but one of those guys talking about this idea. And, you know, what's interesting is that I mentioned, so in California, we have this famous thing called the duck curve, which basically just says what I mentioned earlier. You know, there's the belly of the duck curve, which basically shows that when you have an overproduction of solar or wind, the grid literally has to pay people to turn off. They have to curtail those energy assets. And one of the big questions has always been, well, what could you use that's super modular, something you can turn on very quickly, turn off very quickly, and that's valuable to use that excess energy. And I think that we're going to see a massive trend in the next, you know, call it 12 to 24 months, where a lot of utilities are going to start exploring Bitcoin mining to flatten out that duck curve, because it's something that they can literally plug in, plug out. You know, it's almost instant in terms of turning on and turning off. And as long as the cryptocurrency continues to, you know, retain its value, and I in fact think it's going to increase in value as the security of the network increases with more miners. It's a virtuous feedback loop. Then I think that's going to become one of the short-term solutions while we wait for cheaper lithium-ion batteries to flatten out the duck curve, which will in turn allow us to build a lot more solar and wind. So it sounds a little crazy at first, but it's something I'm really excited about.
Yeah, that excitement is shared by a few people on the Blue Bear team. I'm a little more hesitant here. I mean, obviously, in California, like we're going to, I don't know the exact number, but curtail more than a terawatt hour of electricity this year. And I don't know how much more, if it's even double that. I think it was a terawatt hour last year. So it's a lot of energy. And yeah, using that in a smarter way, if it's mining Bitcoin, if it's powering data centers, if it's trying to shift consumer kind of habits. Some of them are easier, some of them are harder. But I think we will have to get used to also just throwing away electricity because we don't have a better solution right now. But so anybody who has good ideas, what we can do with that, and how we can store that, I think. I mean, I see from Europe, there is a big spike in interest in hydrogen and kind of renewable hydrogen generation through excess electricity. That could also be a potential pathway. But yeah, the verdict is still out. Just to the, and I think honestly, in that kind of energy and industrial space, we need all solutions. We're not going to pick one. We're not going to pick like lithium ion is the only battery we'll ever use, and we'll never use hydrogen. We need all technologies. So, and I think we're starting to see that this is not like a one size fits all type of industry. I actually have a question for you, Jason.
Oh, no. Okay, yeah.
Pull you in, because I think that to the earlier point of the grid digitization, where we see that the regulators are lagging behind. I mean, that's happening a lot of times, but like we're installing these smart heat pumps and HVAC systems and EV chargers, and our utilities don't really understand protocols, or they don't really set kind of set the rules, or our regulators don't, and then we're either stuck with those devices that are potentially smart, but nobody
Sure.
knows the language they're speaking, or they need some kind of retrofit. So on kind of that legal and regulatory side, is there a way for us as on the entrepreneurial and investor kind of mindset to kind of take them along with us a little faster? Because we're, as I said, we're running out of time.
Carolyn, this is a fantastic question, and this was not a plant like whatsoever. We didn't pre talk about this question ahead of time, but I mean, absolutely. I mean, this issue is not unique to the energy and climate discussion in this particular vertical. Is the regulators lag behind. It's particularly bad when you are in energy, because the utility systems are antiquated, the regulators are antiquated. So I'm a venture capital and emerging growth company attorney. So I work with the companies, help them form financings, help VCs deploy capital. But we've got a team of lobbyists and other folks who work in clean tech and energy to help put together a strategy and navigate that strategy. So I think, if you're super early stage, this is not something that you're going to be able to effect in and of yourselves, but it makes sense to get together a strategy ahead of time so you know how to navigate it. That's certainly going to be one of the questions that the VCs are going to ask you for all you early entrepreneurs out there. How are you going to deal with this challenge? What is your game plan? Now, the answer you have may not be the same that they have, but at least you will have thought about it, and that will hopefully give them some comfort that you've done your diligence and are ready to play in this space. But I also want to circle back and just on the comment that you made about sort of dumping energy and electricity. And if I remember this correctly, you may know it better than I do because you have an automotive background, but it's not unprecedented, right? I mean, even in the oil and gas industry, I think gasoline was originally a distillate from when they were trying to make kerosene. People didn't know what to do with it. Turns out you can use cars. So, I mean, that I think should just go and be a point that there's a lot of opportunity out there for this excess energy, which is fantastic. One thing I want to also touch on, so we've talked a lot about energy today. I'm going to get myself out of the spotlight. We've talked a lot about energy today, and it's related to climate, but we're talking about both energy and climate. So I want to kind of zoom over, maybe shift a little bit to transition the conversation to climate technology. Earlier we mentioned, especially in California, there are a lot of challenges with regard to wildfires. PG&E has been shutting off the power in areas to help avoid them. It's made me think about calculating kilowatt hours and how long I can power my fridge, et cetera. Miami's got challenges. Louisiana has challenges all over the world. What are some of the climate change is obviously adversity, but what kinds of opportunities are we seeing that might help to mitigate, blunt, or reverse some of these challenges that we're going to be facing in the future? Open question, and if not, I'll close my eyes and pick somebody.
Okay, maybe I can start. I think a good framework to think about in general climate tech is that there are solutions that are working on mitigation and others that are working on adaptation. And so I think lots of the things that we've been talking about has been on mitigation. How can we reduce greenhouse gas emissions? How can we actually meet the targets that we set globally? There is carbon capture technologies. There is more renewable energy capacity that we could install. There are more efficiencies that we could drive in. I think I've been talking about this a lot, but just in many different industries. On the adaptation side, I think we know that this is happening. And so maybe actually installing a battery at home so that you can survive those PG&E blackouts, that would count as something around there. And I think there are innovations in lots of different spaces. Like if you think about insurance, just how will insurance companies think about the challenges that will come with climate change? How will financial services think about this? The next time that you think about buying a home and thinking about a mortgage, how will it be different? So I think we're seeing that climate tech perspective beyond like technology and energy in all of those other sectors of our life. And yeah, maybe we can talk about other different examples, but just wanted to have that as an initial framework.
That's a great framework. Thank you.
Yeah, I mean, I love that framework as well. Adaptation, mitigation. I think, I mean, look, I think the opportunities are endless. I think literally this is going to be the biggest, revolution and opportunity. Whenever there's chaos and something gets shaken up, like it's really exciting for entrepreneurs to come in there and solve the problem. So I think we think about this in a couple of different ways. Maybe one area where we're most excited about, we always like to ask the question, why now? Like, what has changed now that can empower new kinds of solutions that couldn't have existed 5-10 years ago? One of the big things that I'm most excited about is just the availability of data. And so, one of our core theses is that markets are fantastic, but markets only work when they have two things. One, society has to set sort of the goal of the market, what to optimize for. And two, you need data to verify that the market solutions are working or not. And so one thing that we've been looking at a lot, we just led an investment in a seed stage company, which we'll hopefully announce soon, which basically has built a map of every tree in the United States. And with that, they can now actually verify, if you're doing for their first markets, carbon capture or negative emissions, they can now verify, hey, if a project in Brazil or somewhere in the United States says it's not going to cut down its trees, did they do it or did they not? And then they can also, with that, structure much shorter duration deals for the landowners there that have those trees. So that's really exciting to us, and that simply wasn't, the satellite data to do this wasn't cheap enough 10 years ago. So this is like a pretty big shift. And we're thinking about now, not only in the carbon capture and storage space, but what other kinds of markets will data sort of empower completely new opportunities. So things like biodiversity loss that I mentioned, wildfire prevention. There's no reason we can't put a market price and use a market mechanism to reduce the amount of wildfires here in California. So that's one end. That's probably where we're most focused today. The second area, though, I think Maria mentions this at the top of the issue around adaptation. Man, figuring out how are we going to feed and desalinate water for 7+ billion people at scale. That's a huge opportunity. I know way less about ag tech, but that just seems like ripe for innovation right there.
And on that kind of data side, I think there's still a lot of opportunity to kind of tie in those data sets, as Max mentioned, and also know the company. I'm not gonna and super exciting technology and team, but that kind of data availability and like making use of it in the industry to actually show what's actually happening. So I think they're almost, there's so many technologies out there to measure carbon emission, methane emissions or methane leaks. I think seeing that converge a little more is on the horizon. For the industrial space that Maria knows tons about, like really measure kind of cradle to grave emissions of products and really understand and display those. It's imminent, and there are folks doing this out there. It's still kind of there are a lot of niche solutions, but with public markets now requiring more data and private markets also getting into really tracking ESG, no matter what kind of the policy is for it. It's just it's kind of there's a pull on that data. We see that ourselves as investors because our investors are asking for this, and so we're asking our portfolio for that. But I think that's one thing where everybody who's on this call just ask for more detail and ask for proof points, and that will drive that data that is already out there into more meaningful information and applications.
And I think one last thing that I would like to add there, talking about data, I wouldn't underestimate the power of consumers. And especially right now that we have all of this data available, when we're talking about supply chain and actually saying that, I don't know, this product is sustainable and they actually didn't destroy any trees, and like you can actually check this on a satellite, you will need to verify that. So you will need that like kind of supply chain validation that is not only having the data availability, but also having the consumer pool for that. I think we'll see that in food. I think we'll see that in fashion. I think we're seeing it in energy, of just consumers wanting to know where their energy is coming from. And maybe this is still not global and it is still nascent, but I think we're seeing more and more information flowing to consumers, and definitely a greater pool for these types of solutions and products.
Yeah, and just to mention a few, like Shopify is driving that, and Stripe, they have an offering out there. They're actually at the forefront of becoming carbon negative. Another technology is like a company like Cloverly that's letting you as a consumer track your CO2 footprint. And yeah, really, I think we all here on this call, we can help drive that shift.
Yeah, and just to jump in there, I want to give a plug to one of our portfolio companies called Patch. Patch is essentially the negative emissions API. And what they're really focused on is finding developers. So if you're a developer, and this could be a larger company with a platform like a Shopify, or you could just be an indie developer in your garage, and you want to integrate all kinds of customizable offsets into your app, it's now literally as easy as dropping 1 or 2 lines of code. And so that actually really excites me, because I think if you can win the hearts and minds of developers who I think are already really interested in making a difference, then the impact they can have with their apps and the rest of society is, as we've seen the last 10 years, infinite. So check those guys out.
So we've got probably about another 10 minutes or so before we move on to the Q&A section of our discussion. Before we do, I actually kind of want to zoom out. Some of the things we were probably talking about today might be US trends or US related, and some of them are global. Maybe if I want to spend a little bit of time sort of breaking down a little bit more what we're seeing both on the US side of things in terms of energy and climate, and then also maybe outside of the US, what's a more global trend. And Maria, if you wouldn't mind leading that, since you mentioned you'd be willing to talk about it earlier today, I'd appreciate it.
Of course, I can start, but then I think everyone here has experience internationally, so would also love to hear what everyone has to say. I think that we are seeing solutions that are very tailored to the US, or even very tailored to California and the Bay Area. There are other global solutions. I think we're also seeing a big pool outside of the US and finding solutions on net zero commitments from other governments in Asia, for example. So I think we're seeing that big trend and the way that things are moving. That is definitely general. I think we will need to find business models that work for specific geographies. I think if we talk about developing economies and how we want to bring in more renewable energy, or drive greater efficiencies, or just be more sustainable, we will need to find the drivers in those economies that will make sense for this adoption. So for example, what can we do with low labor costs? What can we do with, just speaking of Latin America, with all of the potential for renewable generation here? So I think it has to be very tailored to the specific geography where you're working on, but there's definitely a big pool everywhere. I think we're seeing how regions are just growing around the world faster than the US. We're seeing Southeast Asia, and I think there might be the opportunity to actually leapfrog in different technologies in some of these geographies. So yeah, definitely growing, but we need to keep the mindset of finding the things that work locally, and don't underestimate those growing regions.
I think your point on leapfrogging is great, actually, and maybe that's also an interesting thought to structure things. Where I think in the U.S. And some of Europe, we need a lot of infrastructure investments to make the current grid and the current kind of energy system that we have ready for the future, to be more digital, more distributed, decentralized, and that's maybe more hope. But I hope that some of kind of the COVID recovery money will be spent in that way, just on that infrastructure. For some areas where we don't have that grid that is centralized yet, we have the technology to kind of leapfrog and get into kind of microgrid solutions. I know it's a huge buzzword and can mean anything and everything, but basically in the sense of no centralized grid, having decentralized decentralized organization of energy generation and distribution in whatever way that is. Could be with blockchain, doesn't have to be. And so I think just like more developing regions not follow the pack, and like in the US and Europe building out what we've had there, and just kind of breaking that norm, because we don't need it anymore. We have to renew it here because it's not supporting the system right now, but we can kind of, yeah, just leapfrog and be much faster in Asia and Africa and some parts of Latin America, I think.
Yeah, I love that vision. Agree with it all. I mean, I would throw out, I guess, three things that are kind of on my mind. One, like figuring out for every region what their sort of energy, resource is, like what their sort of unfair advantage is. And so I think you can kind of go around the world and just look country by country or grid by grid and say, okay, what is the current cost of electricity on that grid today? And, what's the first renewable energy source that's going to cross that point where it's cheaper to buy renewable energy than it is conventional fossil fuel energy. That's exactly what we did when we were evaluating countries for Bright. We looked at a couple of different countries. Mexico had just crossed the tipping point when we went down there. We also looked at South Africa. They were just crossing the tipping point. India, and you can literally go around the world and kind of see what these different technologies are. I've seen a gentleman in the chat has thrown out geothermal a couple of times. Yeah, I mean, geothermal is great if you happen to have those resources like in Iceland or wherever you are. So I think it's just kind of customizing for your country, or if you're in West Texas and you have a lot of wind, build on that. I think one thing that a lot of these countries do need, and this is from personal experience and secondhand experience, is that I think financing for a lot of these both distributed and larger, solar and wind projects in the United States is no longer much of an issue. There's no real shortage of capital, but getting a cheap cost of capital for some of these projects in emerging markets is still tricky. And I think there's an opportunity for insurance products. There's something called kilowatt hour analytics here in the United States, which I think is great. Would love to see more products like that, or like solar puts developed in emerging markets around the world. I think that would unlock a lot of potential. The second thing I would say is, to echo Carolyn, your point, man, I am so excited and would love to see countries in Africa and Southeast Asia and Latin America just leapfrog the grid entirely. Another gentleman talked about peer-to-peer energy trading in the chat earlier. And yeah, I mean, and I think blockchain could play an important role there. I would love to see peer-to-peer energy markets. Unfortunately, I think the US and Europe, will probably be a bit more of laggards here, maybe a little more interesting stuff in Europe, just because we have all this, legacy infrastructure, and it's more of a political challenge than it is a technological challenge. But we don't have that in Africa. And so if you could have, microgrids, whatever that means, a ton of microgrids that are, facilitating peer-to-peer interactions, and then they have their own sort of markets among each other, that's extremely exciting. The third thing I would say is I think for a lot of emerging markets, though, the opportunity is not only greater, but like the pain is a lot greater as well, right? So in a lot of these countries, one, people are going to need, obviously good paying jobs, things like installing solar EVs, et cetera, et cetera. And also, I think it's really important to note that a lot of the countries that are going to be hardest hit by climate change are the poorest as well. And for those countries, it's not like, again, a theoretical issue. There's already, famine in Africa that a lot of people would argue climate change is playing a pretty important role in. So I think the pain is much more acute, and hopefully that'll drive entrepreneurs locally and internationally to act faster.
Oh, yeah. Go ahead.
We didn't scratch on the whole topic of kind of climate risk and how that plays into like what we're building out in the future, but maybe leave that for the Q&A.
That can be our first. We'll open with that in the Q&A, if that's okay with you.
Sure.
So we've got about a minute or so, and we'll start the Q&A. What I'd like to do at this point is just have each of the panelists have an opportunity to, again, sort of reiterate what types of investments you were looking for, both in terms of stage and particular, your thesis, as well as how to contact you if you want to be contacted. Sometimes folks don't want to be contacted, and that's perfectly fine. And then if you have any advice to share for the entrepreneurs in the room, you're welcome to dispense it. So we'll start maybe with the first person to appear in today's pre-call, Maria, and then
Okay.
Max, and then Carolyn.
Great, happy to. Okay, so to reiterate what we're looking for, we at Viva, we're investing in both software and hardware solutions. So we can do everything from deep tech to new business models in energy, for example. We typically invest at a Series B stage. So we're looking for technologies that have been proven and some commercial traction. You can reach me at, write an email. My email is maria@piva.vc or on LinkedIn, and I'm here with my name, so you can find me there.
Awesome. Version 1 Ventures, we typically write checks between $500,000 and $1 million. We're looking to invest from pre-seed to seed stage. So everything from 2 entrepreneurs an idea to a little early initial traction. Again, the big areas we're looking at, number 1, how do you connect an increasingly decentralized grid with renewables and batteries and Internet of Things devices? And then number 2, really looking at some of these data, natural capital markets that new data enables. But at the end of the day, we want to meet smart entrepreneurs. So if you're an entrepreneur, particularly working on software anywhere in this field, we'd love to hear your idea. If you'd like to get in contact with me, the best place is on Twitter. I'm at Max A. Webster, at Max A. Webster.
Yeah, and last but not least, Blue Bear Capital, we invest in digital data-centric business models for the whole energy supply chain. So if one of the areas you're touching or you want to touch in the future is energy, we're the right people to talk to. And if your solution and company growth is mainly coming from software, we invest our usual check size between 2 and 5 million, usually from seed to Series A, sometimes Series B. And yeah, geographical focus is North America and Europe. We're actively looking in Europe. If you're a European entrepreneur, I think there's a lot of good stuff that's coming out of Europe on the energy and also on the climate side. And yeah, you can reach me. I'll actually post my LinkedIn here in the chat, so you can reach me through LinkedIn. That'd be easiest. You can also reach me by email, carolyn@bluebearcap.com.
Thank you, everyone. So we're going to move to the Q&A. You've been a wonderful panel. I'm glad we're going to have you for another 27 minutes or so. I think one piece of advice for the entrepreneurs before we move to Q&A is do your diligence. These VCs just have taken the time to provide some information in terms of what they're looking for. Make sure you jive with what is they're looking for. If you're going to reach out to Max, make sure you can answer the question, why now? I think there are probably a few, I'm sure Maria and Carolyn also feel the same way too, but you can gather information ahead of time and you want to make sure it's a good fit for everybody all around. Otherwise you're just wasting, it's not good use of your time. So with that in mind, let's talk, Carolyn, we were talking about risk of climate change a moment ago. And I think it'd be great if you could just share a few of your thoughts and maybe we get a little bit of a discussion on that.
Yeah, I think that with all infrastructure and just general built environment transition that we're seeing right now, actually understanding and kind of evaluating climate risk at those locations, that is a trend that we've been seeing, and there are a couple of companies out there providing information to insurance companies, but also kind of the real estate world, the industrial world, to really understand where to build what and how to mitigate for what climate risk, because I think we can all agree that climate change is happening, and we see wildfires and floods and increasing number of storms, and we actually have a lot of data to predict how they will kind of evolve. It might not be as accurate, but for kind of climate risk understanding reasons, there's opportunity out there. And I think that's also an opportunity for entrepreneurs to A, be smart about it, and B, offer tools to those markets because they are needed and they will be more in need. And I forgot to your question in the closing remarks to provide some advice. I mean, there's plenty of advice, but I think especially in this space, kind of you're riding on this wave that is currently just breaking. Like, be patient and be creative on how maybe your solution can be used in a different market if it's not like you're not in the right spot yet, or you can win some time or create and educate the market. But I think it's great timing right now if you're interested in working on this topic.
Terrific. So I'm going to take some questions now from the audience. Again, just a kind reminder, please use the Q&A function. So if you've got a question, please use the Q&A function. I'll try and take a look through the chat to see if we've missed anything, but that's where I'll be focused. If you are interested in reaching out to one of these investors, utilize the information they provided to them. Don't use the Q&A function, so I'll just dismiss those. So in no particular order, what sorts of ideas and opportunities are you seeing in terms of helping economies and human capital sort of transition away from fossil fuels? We touched on this. I think there is a lot of opportunity on solar, but is there an opportunity to help the individuals in those local economies, whether they're in West Virginia, Pennsylvania, which is my home state, or Texas, transition away from fossil fuels?
I think this is a great question, and one that I've been looking for an answer to for a long time. And not just in the United States, but globally, I think we really are about to have a seismic shift where a lot of people are about to lose jobs in fields like trucking, et cetera, et cetera. I have not seen a great answer to this question yet, and perhaps I'd love to hear from the other panelists. I think there's an opportunity for government intervention, maybe a nonprofit, but I think there's also some really great business opportunities. So if anyone in the chat, have seen a great platform for retraining, tens of millions of workers to deploy these distributed energy resources at scale, please tell me. I would love to find it.
Yeah, I think in terms of thinking about consumers and you at your house deciding like what type of energy do you want to purchase, I think that has a lot to do with local regulations. So there are places where you can choose to buy 100% of renewable energy, and you can actually do that in place in California. I think you're starting to see those aggregators in different regions. I think we'll see that changing in the future, but it has to do with policy and regulation, and it's hard to find a solution that works everywhere.
Yeah, I agree. Haven't found many great solutions. Just want to plug in one that our friends at LACY, the LA Clean Tech Incubators, have launched, is a training program for people working on electric vehicles. So basically retraining folks from working on traditional vehicles to the specificities of electric vehicles and electric vehicle charging stations. So if you're down in the Southern California area, they have this rolling program. It's just a couple of weeks, and yeah, there's some local funding going to it. But for cities and communities, like launching more of those programs, and actually connecting them with some of the startup hubs locations, so you kind of have like people mixing and mingling a little more. That would be great. I don't know if we have any cities, municipalities folks on the line here yet, but maybe they're listening later.
Hopefully, and to answer the question, if you've registered, you will get a copy of this recording afterwards. So I'll knock that one out. We've got a question about climate change subcategories. So it's not clear to me if they're talking about subcategories within climate tech or just different things that are changing within the climate. I'm gonna presume it's about the different sort of subverticals within climate tech. And earlier, Maria, you mentioned sort of two ways to look at it, sort of a taxonomy in terms of adaptation and mitigation. Are you starting to see other, this field continuing to branch out even further in terms of taxonomy and subverticals, or, you know, what are the different categories?
Yeah, I think.
Yeah.
I think we can look at it in terms of verticals, what different industries are doing to react to climate change, either in mitigation or adaptation. So for example, there are innovations in manufacturing that have to do with that. There are innovations in energy that, and we have been talking about this a lot here. I think every vertical has its own challenges to solve, and there are specific innovations there. Yeah, I don't know if that was helpful. But can talk more about that.
It is. It is. Any other thoughts with the panel, or I'll move on to another question? Okay. Max, earlier you were mentioning some costs for solar power, you know, being between a penny and 5 pennies or 5 cents. There's a question, I think, maybe trying to unpack that number a little bit. I don't know if you can see it, but does the penny per kilowatt hour for solar include the cost of the homeowner and the manufacturing plant and all the panels, or how is it that you got that number?
Yeah, I can drop some a great blog post in the chat that'll explain this a bit more. But I mean, yeah, so that's like all in baked costs, like everything. And what's interesting to note is that you know, there's a couple of big factors for cost. There's obviously the panels themselves. That's been, you know, decreasing very steadily because it's a semiconductor technology. So very similar to what we've seen with, you know, computer chips. There's the balance of systems costs. That's everything from inverters and cables, whatever. That's obviously decreasing less. And then there's the cost of transmission and distribution, which is, you know, often done by a centralized utility, depending on where you live. What's interesting, and actually one area that I don't have like a clear view of how the future is going to play out, I'm curious what other people think, is, you know, on the one hand, if you build really large utility scale solar, as an example, then the economies of scale in building the plant, so the generation cost is actually going to be very low. So if you look at some of these, you know, call it, you know, 1.7 or to 2 cent per kilowatt hour, some of the lowest quoted projects we've seen around the world, it's typically been very, very, very large scale solar projects in really sunny areas like Abu Dhabi or, you know, somewhere in Latin America. What's interesting though, is that they still have to pay the distribution and transmission costs for that. The question I have in my mind is, will we get to a point, you know, or when will we arrive at a point where it's cheaper to have both solar and storage at your own individual home or business, and it's cheaper to have those two things together than pay the transmission and distribution costs? I'm not sure if that's going to happen anytime soon, but I think it's something to be looking for.
Yeah, and I think having a little bit of background on the regulatory side, I think where we have the grid and we still need to offer people being connected to the grid, the cost is probably going to be distributed no matter what. Either you island totally or you will pay for the grid. And I think we're, in most parts of the United States and Europe, we're far away from a lot of people actually disconnecting from the grid. I think to your point on the solar cost, I want to give a shout out to one of our portfolio companies, Raptor Maps, which is developing the system of record for large scale solar installations. Because one thing that we've been kind of looking for and seeing out in the market is we put out all these solar farms and wind farms, and now we want them to operate in the way that they were promised to operate. And so Raptor Maps is using aerial imagery and other data sets to actually increase the output of the solar farm by kind of pointing maintenance and repair technicians there and just kind of doing inspections in a remote way. And I think that stuff like that is super important. Another company in our portfolio called Omnidian is doing that for residential solar. So I think while we always think of like solar and storage, it's kind of install and forget type technology, it's actually not. And we need this operational efficiency and operational excellence that we see in other areas. We need that to be applied to the renewable space as well.
And I think one last thing to add from my side there. I think one of the other factors in the cost, besides the economies of scale and how the hardware is just getting cheaper and you know where to locate so that transmission is best, the cost of capital and accessing cheap financing is what makes or breaks projects. And I think that is something that we'll be seeing. We'll see lots of change in the future, I think, from just big financial institutions that are moving away from investing in oil and gas or in coal into these projects that now seem clearly less risky, and so they can access better financing, and that can clearly change the economics.
Can we stay on that for a minute, Maria, if that's okay? Because there's a question that goes to, well, most investment in alternative energy and climate initiatives come from the government. And it'd be great if we could have a discussion about how, kind of what the landscape looked like in sort of the immediate past and maybe how that's shifting and how, there are other sources of capital that are coming into this system, into the market, as well as kind of where each of you specifically sit, right, in terms of what your investment horizon is. Because I think, we've got 50% of the folks in this room are first-time entrepreneurs, and, they may not really realize that, in order to access certain sources of capital, they've each got investment horizons that they're trying to target, their return on investment. Does that question make sense? I hope.
I think it did.
You can kind of run with it. It's kind of
okay.
open.
Of course. Okay, so I think thinking from an entrepreneur in climate tech, there are different sources of capital that you can access. There is non-dilutive capital. There are grants that has to do with where you are and the type of technology that you're working on. I think maybe Carolyn knows a lot more about that than me, but definitely lots of sources there. Then there is the venture capital that you can access. You need to be very aware of the timeline of the development of your technology and how that matches the fund's lifetime. I think maybe many people here in the audience have heard about Clean Tech 1.0 and how about a decade ago there was many billions invested in clean tech and not a lot of returns. And that has to do mainly with the misalignment of the actual time frame of the development of that technology and actually coming to where it can reach commercialization, and the time frame of funds and where they needed to have their returns back. So you need to be aware of the technical risk and the time that your technology will take to hit the market. For example, Viva, we're a typical 10-year fund, so we expect to invest and see returns during the lifetime of our fund. We are seeing more and more different sources of capital, especially in the climate tech space, that is maybe called more patient capital. So funds that are now 18 or 20 years that can actually invest in earlier stage technologies and take the time to see them mature and actually see returns in a longer time frame. So I think from an entrepreneur perspective, you need to be very aware of these timeframes and how investors think about them. Also be very aware of the amount of capital that you're raising. I think we'll see a lot of money flowing in, new venture funds that want to invest in this space because we're seeing how returns are going to be made here. You also need to be careful to not just raise a lot of money because you can, and actually think about how your investors will look at them. So I'll leave it at that, but I'm sure everyone has a lot of opinions here as well.
Yeah, I think so. Our limited partner base is largely from the private equity world. There's a lot of interest in investing in projects and hardware. So there's money out there as well. I think two other sources of capital is one, the best source of venture capital is customer contracts. So really signing up customers and really building your business around that. And then adding to that other sources like venture funding or debt funding or whatever makes sense for you, and be very strategic about that. I agree totally with Maria. There's going to be a lot of money to be invested in that space, and just be aware of that. It's not always the best decision to take the money or more money than you need. And Jason will give you great advice on that.
It's a means to an end, not an end in and of itself. I mean, that's, you know, and you need to have a plan for it, right? And it needs to be reasonable and rational and achievable. I mean, that's, I would imagine that's
exactly.
Yeah.
and then on the other hand, there is a lot of government funding, and I think specifically grants, if it's from like California Energy Commission, Department of Energy, other kind of local groups, and yeah, organizations. So that is also a great source of funding, where you can kind of, especially if you're developing deeper technology, you can get kind of through the first stages of your business through grant funding. The same is true in Europe, where you can have a lot of access to capital outside venture. And while we're all venture investors and we're all here on this panel looking for great investments to make, I just want you to be aware of that this might not be what you want or need at some times.
I think those are all great points. I mean, I think, you know, definitely understand the source of capital you're going to, what their time frame is, what their specialty is. You know, speaking for version 1, I mean, we're you know, $45 million seed stage fund. So for us, you know, we're primarily investing in software companies. You know, we're primarily looking for that sort of decade-long time horizon. So our kind of thinking is going to be very different than, you know, say another fund that's looking at hardware. And there are those funds that exist, but you just kind of have to identify the right ones. I think the other thing that I would consider is kind of what your business model is. I encourage every entrepreneur, like, you know, obviously it's 2020 and that sort of the days of the business plan are long over, but I think having a strategic memo is extremely helpful. That's something I always look for in the best entrepreneurs, is they can articulate for me their vision, not only of how they're getting started, but what the grand strategy is over the next decade in 1 to 2 pages. And if you go back, you know, people act like they're very surprised with what's happening with Tesla right now. Elon laid all of this out like 20 years ago or whatever when he was starting the company. Now, I'm not saying everyone's going to be an Elon Musk or have that kind of crazy, you know, point A to point Z vision, but I do think that's something that I always look for, is like very clear thought. And here's where we start. It's our beachhead. Here's where we're going, and here are all the steps to get there, and the different sources of financing we might need along the way. If you're going for, like, let's say a SaaS play, for example, then that might be, you know, a shorter time duration and kind of a clearer path. There are some venture investors that may be willing to take a bit more of a flyer if you're going for something with really large network effects. For example, I'm looking at a lot of businesses that are trying to provide software for EV chargers. And if you think there's sort of the Android network effect play there, then they might be willing to take some different kinds of risks. So I think it's just important that you can articulate what that big vision is and the different steps and different financing sources to get there.
In sort of, I think one thing that Carolyn said, it jives with that. And one thing that Carolyn said is, you know, the best kind of capital you can get are customer contracts. I mean, that's on a host of levels, or it's a whole bunch of reasons why that's important. But first and foremost, it's proof, right? It's proof that you've got a business and that somebody is interested in the technology or the you know, the product that you're selling. And I think, you know, most of the times when you're raising from venture capital, it's money to help you scale something that works and is going to be successful, not, you know, not to necessarily to the initial pie in the sky. Now, maybe really, really early stage, it's a little bit different, or certainly when you're raising from friends, family, and fools, the 3 Fs, as we sometimes call them. But, you know, by the time that you've reached out to a venture investor, they're looking for something most of the time they're looking for something that's got traction, or something that's going to be able to go somewhere. And you have to be able to articulate that, as what Max said. So there are a few questions here, and I apologize for the, you know, during the whole call or during this entire time, I'm kind of looking all over my screen because I'm running everything in the background. So bear with me there. But there are some one-offs that I think we might want to take. This one might be for you, Carolyn, which are talking about the EU taxonomy and how that will impact VC activities in the EU. I'm not particularly familiar with that, but since you've got an interest and do a lot of work in the EU, maybe you can take that and sort of discuss what role that's going to have moving forward.
Yeah, I think I'm not sure which parts of the taxonomy this is alluding to, but one area that is interesting is EU is on the path of actually tracking cross country emission trading or products and how that relates to their emissions. And I think that will drive a lot of what we talked about, like software to track and kind of visualize what's going on the emissions scale out there, but also will make people more aware and kind of the whole kind of carbon emission economy, I think could potentially be kind of started or grown from Europe towards the rest of the world. So super excited about that. I think in general, there's a lot of US investors are looking to invest in Europe. So I think there's going to be a lot more capital available as well. And we're all sitting in front of Zoom calls anyway, so it doesn't really matter where you are. We just have to get up a little earlier or later, stay up later.
That's right. So thank you for answering that. There's a question that, asks about sort of Chinese battery startups and talking about Congo mining. I think there's sort of maybe a larger question or point here, which is, and we touched on a little bit earlier, especially if you are a consumer-facing brand or focus. But I mean, I think there is a real interest in, if you're in clean tech, if you are trying to build a better, brighter future, tracking and sourcing in a sustainable and ethically responsible way. We talked about some ESG, tracking of funds and some pressure that's being put on by LPs for your funds. So Carolyn, you spoke about that earlier. Can you give us a little bit of an overview in terms of how this is shifting and how it's being important, and there's transparency that's getting brought to bear in terms of where companies are sourcing their materials or what they're doing to stay ethical?
Yeah, I think there's a lot of at this point there's a lot of voluntary tracking of things still, but I think that will mature. For us, for example, we track ESG metrics throughout all our portfolio. We ask all our portfolio companies to have a page on that and board meetings, and I think that will just become more and more required from public markets. We're still a little bit in the Wild West. What we do at Blue Bear is based on the UN SDG framework. You can see that on our website, www.bluebearcap.com, and see our ESG framework there. I think it's right now it's Wild West. Come up with something and that makes sense and be able to explain it, but it will be more and more kind of structured and kind of streamlined over the next year or two. I'm curious how the others are dealing with that, Max and Maria, in your fund reporting and startup reporting. And I think that also relates, we haven't talked about that at all, to diversity in general. Hey, we have a great diverse panel here, but the industry doesn't look like that. What can we do to drive diversity and inclusion, through investors, but also startup founders is another topic dear to my heart.
I completely agree. I think this is definitely not how the industry looks like. I think we'd like to see more diverse backgrounds, both in founders and in investors. Having more diverse investors will also make us find diverse perspectives in founders. At Piva, we're looking at this. So we're also just starting to see how we can frame this internally. So definitely having these conversations with our portfolio companies, making sure that everyone is on the same page, making sure that this is a priority for everyone. And I think, we will see a lot more transparency in the future, both in how funds are structured, but also in how companies operate. I think we will start to see more reporting. As Caroline mentioned, it has been pretty voluntary for now. People decide what to share and what to disclose. I think we'll actually see more scrutiny being baked into those processes in the future. And I honestly think that we will see companies that can innovate in there, thinking about how to measure and track ESG metrics across different verticals and across supply chains.
Yeah, I mean, a couple of things I guess to address there. One, we're seeing a ton of startups right now that are looking at the ESG reporting thing, and I think it's great that that's becoming such a trend. We've made 2 investments on the offset side, so we're seeing a ton of demand from really big companies who are often deploying millions of dollars in offsets, and I think you're only going to see that continue to grow with the regulatory pressure. Not as much expert in Europe, but it does seem like they're leading the way, which is great. Also completely agree on the diversity piece. One thing that we're looking for there is, to continue to do more international investing as well. We're primarily focused on North America, US and Canada, done some European deals, but obviously Latin America near and dear to my heart. So I'm always meeting entrepreneurs from Mexico, Colombia, Venezuela, Southeast Asia. And yeah, we'd love to keep funding great teams wherever they are.
Well, fantastic. So that is all the time that we have today. Before I let you go, I guess 15 or 20 seconds, if there's any final comment or word, or you just want to give your email address, if so folks know how to contact you, that's fine. I'll go around the horn with Max first, and then Maria and Carolyn.
Yep. Best way to reach me, Twitter, Max A Webster. And my email is also on there, max@version1.vc. But typically more responsive on Twitter.
Great. Okay, my email, best way to reach me, it's maria@piva.vc. You can also find me on LinkedIn.
Yeah, I posted my LinkedIn here. It's Carolyn Funk with a C. And yeah, email us carolyn@bluebearcap.com. Would love to stay connected. And yeah, as I said throughout the call, we're running out of time. So we got to make this shift happen quickly. Let's all work on it.
Caroline, you're absolutely right. And with that in mind, we've run out of time today. I want to thank Carolyn Funk, Maria Boychan, Max Webster, Rob Lau at Idea to IPO for organizing today's event. I want to thank each of the folks who registered and attended today. You'll get a copy in the next day or two. Thank you very much, and stay safe.
Thank you. Bye-bye.